Everyone, Chad Mays here with CEM Commercial, interviewing Ryan, who is with one of our many capital sources. So before we get started, Ryan, would you mind giving us a quick overview about yourself and your commercial real estate lending programs?
Sure. My role is an account exec, basically to help facilitate new loans for commercially backed loans, anything that's income producing or investment producing. Our company has been around about 8 years. We've grown about 30% each year since, and we're growing more now, ironically, in this market. There's a bigger focus on commercial loans nowadays because of the credit crunch. We did $1.3 billion in loans last year. We're on pace to do 1.9 this year. We're very excited.
Wow. What makes you different between a bank and hard money?
Well, we're a privately held company that lends to businesses that are underserved by traditional lending sources. So traditional lending source on one end would be a bank, where they give their loans to their business owners because they have their deposits and other features that allow them to do those loans. There's attractors and detractors, reasons why they would go to a bank versus us. On the other end, you would have hard money lenders. They lend on a shorter term process than us. And also for new construction or build outs or things of that nature at a much higher rate. We're in the middle, bridging the gap.
Okay. What types of properties do you lend on, and how much do you lend?
Well, it's probably easier to explain what properties we don't lend on. We don't lend on churches, and we don't lend on agriculture or undeveloped land. Loan amounts, we loan anywhere from $100,000 up to $1 million.
Thank you. What does stated income and stated asset mean?
Just what it says. Our properties, our loans actually are focused on stated income, stated asset. We don't ask the borrower to sign a 4506 form, much like a bank would. We do want to know if the property is income producing. We want to know the details of those leases and the rents. But as far as what the individual borrower or business owner's income taxes are, we don't look at that.
What combined loan to value do you go up to?
Well, on an owner-occupied property, we'll go up as high as 90% combined loan to value. It's on a case-by-case basis, but we do that fairly frequently.
What documents does a borrower need to provide for pre-approval?
Pre-approvals we try and make as simple as possible. All we need is a credit report that's 30 days or less old, and also a 1003 explaining the details of the property that they want to finance, and also the borrower's assets and income stated clearly, and then also any properties that they also own outside of what we're working on at the moment.
And generally, how long is the process?
Well, pre-approval process, once you make those submissions, we like to get an answer back in 48 hours. Mm-hmm. We like to do it faster actually, but 48 hours. From that point on, once you have your conditions, there's usually about 10 days trying to get the ball rolling with the borrower. Once you accept once you access and gain the deposit for the appraisal, then there's about 30 days there. Add that all together, we shoot for a closing within 45 to 60 days. Sometimes we beat that. Sometimes if there's some fee dragging on the owner's expense, it can take a little longer, but we shoot for 45 to 60 days.
Great, sounds good. Thanks for your time, Ryan.
Sure.